I'm Wolf Piccoli. I'm the co-president at Teneo Risk. Specifically, I run the political risk advisory arm of Teneo. Teneo provides strategic counsel to the CEOs and business leaders of some of the world leading companies. In particular, we help the C-suite to deal with the uncertainties, the disruption that is out there that can make the life of business more or less difficult. The political risk service provides political risk analysis to investors, specifically looking how politics impacts on the investment and activities of our clients. I focus on Europe at large, and specifically Turkey, Greece, and Italy. In terms of Turkey, which is today's topic, I lived in Ankara. I did my master in Turkey. I speak the language. I've been working in the country for more than 20 years. Plenty of uncertainty following the local election on the 31st of March. The ruling party of President Tayyip Erdogan suffered a significant setback that day. There is still now a major dispute about the outcome of the election in Istanbul, which is Turkey's biggest city and is worth around 30% of the country's GDP. Erdogan came out this morning with a very belligerent statement suggesting that widespread irregularities were committed the day of the vote, and indicating that a potential rerun of the vote is a possibility. The AK Party, meanwhile, also yesterday moved and asked to the electoral board to review, to do another vote counting in all the districts of Istanbul. So, in terms of, as far as Istanbul is concerned, the outcome of the election is still pending. It's not just Istanbul. If you look at the result of the election, the local election, the opposition has managed to win in 8 of the 12 largest cities in Turkey. The total combined is around 65% of Turkey GDP. Erdogan knows more than anybody else how important it is to control municipalities. He started his career as a mayor of Istanbul in 1994. Running big cities allows you to cater for a large amount of voters, specifically about their basic needs. So Erdogan knows here that we have a window of 4 years with no election that the opposition can try to use now by controlling these big cities to maximize their popularity. And that is why right now is pushing back on the Istanbul front, which was the electoral contest, which was the tightest one with a margin of around 20,000 votes. Now it's been reduced to 16,000 votes. Ankara is lost. The other city, the margin was even bigger. Well, from the investor's point of view, the question here is that the expectation was that after the local election, the government was facing a 4-year period without election. Therefore, having the window of opportunity here to enact the reforms that the market had been waiting for a long time. Now, we got uncertainty about the outcome of the election still. It is clear that Erdogan is not willing to let it go. And in our view, the outlook for reforms was pretty dire before even the vote. Now is even worse right now. So in this sense, we have the finance minister of Turkey, Berat Albayrak, Erdogan's son-in-law, that is this Wednesday, on the 10th of April, is expected to unveil a new economic plan. On our side, we keep our expectation extremely low. We could see something about the tax reform, something about the agricultural sector, some measure to tackle unemployment, but we don't expect anything particularly realistic and concrete in terms of dealing with Turkey macro imbalances. So specifically, we do not expect measures to tackle the NPL problem and the huge issue of corporate restructuring. So all in all, here there is a risk that after Albayrak's speech on Wednesday, assuming it happens on Wednesday because it's already been postponed once, there could be a negative market reaction coming. Again, this political uncertainty and Erdogan unwillingness to let it go in terms of Istanbul is creating further headaches for the Central Bank of Turkey. The bank was forced by the authorities to enact some unorthodox measures ahead of the vote to give a sense of stability to the Turkish lira. These measures now they're being unwinding them since earlier this morning, and we also know the reserves of the central bank are running short. So here there is a clear need to move quickly from the Turkish policymakers to regain market credibility. But again, having said that, our view remains that for the time being, what we might see at best is some ad hoc measures, some short fixes, rather than the reforms that market have been waiting for a very long time. Is that the crisis that Turkey's economy is facing right now is very different from the past ones. In the past, the sovereign was a problem. Now the problem is the corporate sector in Turkey, and specifically companies in the construction, infrastructure, energy sector, which managed to get significant loans in foreign currency in the recent past. They are companies that are not hedged, and as a result of the significant depreciation of the Turkish lira, they are now struggling to pay back their debts. So the political economy of this crisis is very much about the corporate sector and the impact of the bankruptcies of these companies on the Turkish banking sector. The NPLs, the official line in Turkey is that the NPLs are now at 4%. That is a figure that is somewhat laughable. At least the figure is at least double than that, if not more, and more will come in the near future here. So the question for the government is, first, the willingness to facilitate these companies to restructure, which will mean, for Erdogan's point of view, two things: antagonizing lots of companies that had been bankrolling his party for the last 15, 20 years, and secondly, looking at an employment figure going up. The construction sector employs right now 1.6 million people. At the very top was 2.3 million people. People that if fired will struggle to find a job given their low skills. Secondly, what we will need to see whether we have something about to help the bank to recapitalize, the creation of a bad bank to deal with all the NPLs. As of now, there is no sign of that happening. The question that also clients have very often is whether Turkey will go to the IMF. I think that is an option only if Erdogan is basically forced with the shoulder against the wall and he has no other option. Basically, Erdogan here staring into the abyss, then he will go to the IMF. If that is the case, we will need a major program worth around $70–80 billion to restore some credibility into the Turkish markets. Leaving aside the domestic politics, foreign policy also going to remain a difficult one, specifically the relationship between the US and Turkey. The issue of the Russian air defense missile, the S-400, is going to be the one dominating the agenda over the next few weeks. Turkey, as of now, is still planning to go ahead with the acquisition of the Russian missiles. Ankara is not willing to budge on this. Washington has made very clear that the repercussion will be significant on a variety of fronts, specifically in terms of military procurement and defense industry. On the Turkish side, there is still a belief that the issue can be solved at the very top with a phone call between President Trump and President Erdogan. That again is a misguided belief. From the US side, they are looking at this potential acquisition of Russian weapons as a major act of betrayal. So if Turkey decides to go ahead with this, and Turkey is supposed to take delivery of the S-400 in July and eventually will be assembled by October, we will see the American government enacting sanctions against Turkey. That is certainly one of the risks. The worsening US-Turkey relation could have an impact on what the IMF is going to ask there. There is already a bill in the US Congress asking to international lending institutions. The IMF right now is not in the list, but it could be added to apply human rights standards when they are lending to countries like Turkey. So a worsening of US-Turkey relation because of the S-400 could complicate Ankara efforts eventually to get an IMF plan. An IMF plan that would also require bringing back the independence of the Turkish central banks, independence of lots of other regulatory and bodies, things that they're going to be fairly difficult to sell to Erdogan. So saying that Turkey will apply to IMF is one thing. Looking for an agreement there is going to be a very different kind of path. Well, Erdogan is off today in Moscow to see Putin. The conversation will be mainly about Syria and about the S-400. Then we have to wait for the result of the appeal by the AK Party to the Electoral Board of Turkey for the recounts in Istanbul's 39 districts. The deadline for that is Wednesday. On Wednesday as well, we got the Finance Minister Barak supposed to unveil his new economic measures. So these are the key signposts for the near future. If we look a bit further down, the deadline for an eventual deal between Washington and Ankara over the S-400, meaning Turkey giving up on the S-400 and accepting the US offer of an alternative defense system, is basically June.